Hey everyone, welcome to another edition of Hummingbot Live. Today is October 3rd, 2019. We are on Hummingbot version 0.5, which was released 10 days ago. So Hummingbot Live, for those who don't know, is a weekly live stream that we do. The main goal is to help the people in our community understand what's going on with Hummingbot, the new features we push with every release. So typically we talk about what's new, give folks an update, answer questions, and then we run bots. Today we actually have a special edition of Hummingbot Live because we have Corey from Dolomite, a new decentralized exchange who is building a connector into Hummingbot, which will allow anyone in their community as well as anyone in our community to run bots on the Dolomite exchange. So we have Corey waiting in the wings to do an interview to talk about the origins of Dolomite, what makes it different from other decentralized exchanges, and also how they made the choice to work on a connector for Hummingbot. First of all, any questions, please put them on the comments section in YouTube. And as always, feel free to subscribe and like the channel, and you'll be updated on future editions of the show. A couple of housekeeping notes. And so we released a ton of stuff in version 0.15. So I'm going to go over that once again and give you a preview over of what's coming out in 0.16. So 0.15, here are the release notes. And this was kind of like a big bang release for us because what happened was we've been working on all this stuff and it was in testing, and then we finally got it all tested and all got merged in 0.15. So the major thing was paper trading, a mode that allows people to essentially use dummy assets when they run a strategy so they can test new parameters, new strategies, and new exchanges without risking their real capital. Secondly, we made a bunch of improvements to the pure market making strategy. We added basically a delay, which is the parameter called filled order replenish wait time. What this means is when an order is filled, the bot can wait like 10 seconds or 30 seconds before placing a new order. And the reason you might want this is because sometimes like you have these really big orders in the market that maybe take like that eat up a bunch of orders in the order book, and maybe you don't want to kind of like catch a falling knife, so to speak. You don't want to kind of like stand in front of this big wave of orders and constantly being filled, and then having your new orders also be filled by the same order. You may want to kind of wait until like the market has moved in one direction in a meaningful way before placing another set of orders. Another parameter here is it's called enable order fill and stop cancellation. This is basically a way to control how your orders are set based on what happened to your prior orders. So essentially it allows you to crystallize the bid-ask spread in the event the market moves. So it's kind of like a way to almost like try to make sure that once you do a buy, the next sell you do is going to make money versus that previous buy. Moving on, we also made a bunch of simplifications to the cross-exchange market-making strategy. That was the first strategy we released back in April, and it's gotten kind of out of date a bit as we've improved some of the other strategies. So we conformed some of the parameter names to that of the other strategies. We also simplified it so that the bot is always going to place orders instead of trying to decide, whether it's profitable or not to place orders. And finally, we made a bunch of updates to the discovery strategy. The discovery strategy is intended to basically run a report that helps you figure out the best markets where you want to do arbitrage. Basically, it computes the expected arbitrage profit for kind of like all the trading pairs on an exchange. Now, the issue with the discovery is that because some order books have a lot of data, and some exchanges may have like 500 different trading pairs. So, it might take like 20, 30 minutes for this thing to finish running. And, we're all busy. We have lives. We don't want to sit around for that long. So what we did was um, we made it possible for you to specify certain tokens. So you can say in the configuration file, I just care about trading pairs with, let's say, uh, BTC in it, or only trading pairs with, the 0x token. And so then it restricts the number of trading pairs that the strategy uses, and it should be simpler. So one common thing I like to do is I just put in the tokens that I actually have. So because I'm not gonna go out and buy a token just to do an arbitrage trade with it. I'd rather run an arbitrage bot just on the ones that I have. So that should make it easier for people to use by simplifying how it works and reducing the time necessary for it to run. So that's what's coming. That's what came out in 0.15. In 0.16, we have another more parameters that'll give you more control over the pure market making strategy. In particular, there's something called penny jumping mode that we're introducing in the next release, and so I think in the next version of Hummingbot Live, I'm really going to go over some of these new things we've added to the pure market making strategy to show you how to use them and when you would want to use them, given what's happening in the market. So with that, I wanted to start the interview portion of our show today. So I'm going to bring in Corey from Dolomite, and we're going to have a conversation with him. 1 second. Okay. Hey, Corey.
Hey, can you hear me?
Yes, I think I can, and I believe you are live right now, streaming to an audience of 8 people watching on YouTube. Say hi.
Awesome. Hey, everyone.
This also is being recorded for posterity, so yeah. So hopefully we'll get lots of attention. So just as an introduction, Dolomite, Corey from Dolomite is one of our close partners. We've been working with them for a long time, and we've known them. We've known of Dolomite probably for the last year or so. We're both active in the decentralized finance community, and we're incredibly excited to have Corey on the show today to talk about Dolomite and what they're doing with Hummingbot. So first of all, welcome to the show, Corey. If you
Thank you
could,
for having me.
thank you. If you could maybe spend a few minutes and talk about how you got into this space.
Yeah, so I first came into the cryptocurrency DeFi space in 2015. Around that time, I was actually a user of Bitcoin, just trying to buy some software online. And eventually that transformed into seeing that there was opportunities to trade it. Lost a lot of money at first trading it because I didn't really know what I was doing, but I had a lot of fun. It was really, really fun. And eventually just realized that there was a lot of really strong use cases surrounding the technology that really piqued my interest. And so over the course of 2015 into 2017, was trading it quite a bit. And as the price started going up, everyone thought that they were really smart trading it, but really just the market was really just booming. And so eventually my co-founder and I, Adam, were trading a lot of cryptocurrencies back and forth. And a lot of them were on pretty obscure exchanges, varying ones that were based out of China or Korea. And that led us to be pretty concerned about the safety of our assets, because there were a lot of exchange hacks that were being announced left and right, or instances where the founders of the exchanges were taking their the custodied assets and running off with them. And so we did a lot of research that led us to the DeFi space and the technology that was being built at the time to help combat against these issues and introduce more transparency.
Interesting. So how did you kind of like choose to build, like why did you choose to build an exchange instead of like another, some other product in the crypto world?
Yeah, so overall, we'd say that there weren't a lot of good decentralized exchanges out there at the time, because this was in late 2017 or so. This is when Radar Relay, which is another popular decentralized exchange, was just popping up. And your best option at the time was Ether Delta. And even for the most tech savvy people that write code every single day, that's pretty well known to be a pretty difficult to use exchange. I know some really smart people that still have assets that are stuck on there and they can't figure out how to get them out. So it's just a really funny dilemma. And so overall, we were really big fans of the technology, my co-founder and I, but just didn't really know of any good platforms out there. So we just thought to ourselves, why don't we just try building one ourselves? And
Right.
what basically evolved from a pet project turned into a very, very substantial business, basically.
Interesting. Yeah, yeah. That really resonates with me. I actually said to a friend yesterday who he's trying to move his BSV off of Coinbase, but Coinbase has locked down withdrawals for the last couple of months, and so he can't even, even though it's his tokens, he can't access them anymore. Um, that's really interesting. So, tell me about Dolomite and like what makes Dolomite different from other decentralized exchanges.
Yeah, absolutely. So it depends on which angle you're really looking at with this. But overall, Dolomite's based in the US. So
Mhm.
we're kind of a US first company. So with that, we're of course supporting US customers. A number of decentralized exchanges have started shutting off access to US users or limiting which trading pairs you could see. But overall, every trading pair that you see on Dolomite will be offered to the US first and foremost. From there, we really wanted to make decentralized trading easy. And so what that looks like is we have a really simplified account system so that new users that visit the site can get up and running on a decentralized exchange very quickly, even with no experience in managing a wallet, knowing what a private key is, or anything like that, actually. And so we actually tailored our platform, or partitioned it rather, for those users that are more tech savvy with decentralized exchanges and already have a managed wallet like MetaMask or Fortmatic or Portis or their own key store file.
Mhm.
And then those that come to the site that don't have those already, we actually change the experience slightly so that it's a little bit less Dexy in the language and the way that certain things are oriented, and more so like a centralized exchange or a typical exchange. And so this more so draws people in to make a traditional account using email and password.
Mhm.
And then this bleeds into the other ways that make Dolomite different, in that we have a very, very um, complex but powerful system in place that lets us broker assets
Hmm.
trustlessly. So using an email and password, users are actually able to manage a smart wallet that actually custodies assets for them, that offers
Mhm.
some pretty great benefits in that they don't need to wrap ETH, approve tokens, or otherwise do these things that are typical of DEXs that are very difficult to do,
Mhm.
but and have to figure out how to do. But luckily, in this situation, they don't need to.
Mhm.
So a typical experience, what this tangibly looks like, is if you're a Binance user or a Coinbase user,
Mhm.
and you have an asset on there like basic attention token or BAT, for example, you'd have to withdraw the BAT to an exchange you want to trade on.
Mhm.
But if it's a decentralized exchange, you also need to make sure that you have Ethereum or ETH in the wallet that you're withdrawing it to,
Mhm.
because you need to make sure that you're doing those token approvals and potentially wrapping ETH in order to set up your wallet for trading.
Right.
Even though that stuff that I just mentioned, for the most part, is a one-time process,
Mhm.
the fact that you still have to do it is a very, very large user experience burden, and it's a pretty large educational hurdle. The great thing with Dolomite is that once you withdraw those assets to your wallet, that's
Mhm.
all you need to do to start trading. So if you want to go trade BAT, that's all you need in your wallet. And it sounds like it's such a simple thing to say, but it's
Mhm.
unfortunately been a very difficult thing to overcome.
Right. Right. Yeah. That definitely makes sense to me. But have you so you mentioned that people who use the email password are like you're kind of creating the smart wallet for them that they can use. Um, how do they like? Is this a? It seems like there's some trust that they have to kind of like have here that this process works. How do you kind of like kind of like manage that part so it's like they're not like is it completely trusted or is there like some process in place that these guys can like kind of get the same trust associates they have if they use MetaMask.
Yeah, so there's always going to be like a spectrum of trust in place, and we don't want to market it as something that's as trustless as using MetaMask, because
Hmm.
that's completely and totally managed by you.
Right.
But comparing it to the outlook of using a centralized exchange, it's leaps and bounds different from that. Every action that the smart wallet does is completely uh, manageable by the wallet that's managed by your email and password, actually.
Hmm.
So should Dolomite get shut down, or we just turn it off and say we don't want to do this anymore, the wallet's completely and totally accessible by you, regardless of whether or not we're up and running, which is one very, very large difference between us and a centralized exchange.
Hmm.
Um, So of course, it's not going to be quite as convenient because we'll basically put a tool out there so that people can access it. But it's not going to be quite as out there as using MetaMask, of course.
Got it.
Um,
All right.
just a couple of other ways then that make us different as well is that we're the first decentralized exchange to introduce negative maker fees, so that every trade that a maker places onto the exchange that gets filled
Hmm.
actually receives negative 0.1% of the value of the trade. So, for
Mhm.
example, if you place a $1,000 maker trade on there and it gets filled, we'll actually pay you a dollar, and you receive the rebate in real time for doing so.
Hmm. Interesting. Yeah, that's. So you're saying that like, if I'm a market maker on your platform, and then so I'm basically getting a 10 basis point, um, payment every time that like my order generates results in a fill trade. That's interesting. Yeah. Is
Yeah.
there? I guess are you concerned about like watch trading at all? I guess, do you have any kind of like safeguards against that? Like, let's say, like if I'm a malicious actor and I go in and I create some bot that like trades with myself, like would I also like is there a benefit I would get from doing that?
Not really, honestly. Just because we still pass along the gas costs for settling trades on the decentralized exchange to
Mm,
the end user,
okay,
which is the taker in the situation. The makers do not pay gas fees. So
okay,
you basically be wasting money in that regard.
I see, I see. And is there a fee for takers, or are you charging takers a fee right now?
Yeah, so as of right now, the taker fee is 0.5% or 50 basis points,
Okay,
as well as the gas fee for settling trades.
got
What
it.
we notice is the overall like I guess psyche of a taker is very different from that of a maker. And that the
Hmm.
maker is very conscientious of the trades that they're placing. They're trying to maximize fee reductions as well as any profit that they're potentially taking.
Hmm.
Whereas the taker, generally speaking, needs very quick access to liquidity. And at
Right.
that point, they don't necessarily care what the fee is because the service that you're providing to them is the liquidity that they are taking, basically.
Okay. And what assets are you trading on the exchange right now?
Yeah, so as of our launch, which was about almost 2 weeks ago at this point,
Hmm.
we have LRC, which is Loopring's native token against ETH, as well as ETH against DAI.
Hmm.
We're going to be launching a couple new pairs in the coming weeks. In particular, Basic Attention Token is one of those that's on the forefront.
Okay. Cool. And of course, as a market maker, you're still dependent upon takers coming to the market, and having different, and basically having access and maybe making trades in the market. How are you guys thinking about in getting takers and getting on board and to trade on your exchange?
Yeah, it's a great question. I'd say the biggest way that we're looking at for this is adding margin trading, because
Hmm.
overall, we're really trying to orient Dolomite as an easy to use decentralized exchange
Hmm.
that's in its own right also powerful to attract those sophisticated takers to the platform.
Hmm.
And so in the coming weeks, we're going to be launching margin trading. We'll also be one of the first decentralized exchanges to not just have margin trading, but also limit orders for it as well.
Hmm.
So you'll actually be able to place limit orders that will execute a margin trade upon the price being breached at that level.
Hmm.
So really trying to add tools like that as well as stop limit, stop orders as well, and take profit, which will be
Hmm.
coming out in the future as well.
Hmm.
And so those will be ways for us to generate taker volume off the bat.
Okay.
And so just one other thing I wanted to add on to that is,
Sure.
generally speaking, when I say making a decentralized exchange easy to use, one of those things is also abstracting away the blockchain layer from the end user. We
Hmm.
see talking to the blockchain directly as a very difficult thing to worry about. And we know that Hummingbot has to worry about it as well as a client because of the
Hmm.
worry about reorganizations, the potential transactions being dropped, watching transactions being mined, watching them
Yep.
settle, et cetera, et cetera. And so by having our backend basically be the delegator, so to speak, of all the transactions that you're broadcasting,
Hmm.
we're really trying to make the usage either from an API perspective of using Hummingbot or the end user a lot easier. So all fees that the user pays, we basically present an option to them so that the fees can be paid in a native token that they're trading. And we
Hmm.
take the equivalent value of the gas fee in that token then. So as an example, if you come
Hmm.
to the exchange and you're paying the trading fees in the token that you're purchasing, which is
Right.
pretty standard experience, and you're paying the fee, for example, in DAI because you're on the ETH DAI pair and your token that you're purchasing is DAI, we'll take the fee out in DAI then in that situation.
Okay. Got it. Got it. So you're always taking the fee in the quote token, the quote asset. Is that
Yeah,
right?
exactly.
Okay. Got it. Okay. Interesting. Cool. And so kind of transition a bit to how you guys decided to work with Hummingbot. Like, what do you see as like the main benefit of like building this Hummingbot connector, which you guys have spent a ton of time and effort on? Like, why did you want to do that in the first place?
Yeah. And so when it came to the decision making process for it, like the first thing like you have to look at with it is how long will it take you to get up and running with the code base for this, because it's in Python. It's a new code base to get oriented with, new standards in place.
Hmm.
And of course, our team's pretty knowledgeable with exchanges, but they're not necessarily knowledgeable of how Hummingbot's going to be solving this problem. And so what we first did was we just basically casted the rod out there and wanted to discover how you guys deal with typical issues that were out there when it came to integrating with exchanges, let alone decentralized exchanges. And we were really impressed by the way that you guys handle the typical problems that arise. With ourselves being pretty knowledgeable and experienced with working with DEX technology on Ethereum,
Hmm.
we knew that there were going to be certain pitfalls that bots would run into.
Hmm.
And seeing you guys handle them very cleanly was a very, very big turn on for us.
Oh,
And so
excellent.
one of the biggest things we wanted to discover with it is if you guys have this base layer in place that says that we know how to handle all those reorganizations, standardizing markets, backup policies, retry policies, how we handle different error cases and recover from them. Seeing that those were all handled very cleanly for us was like, okay, it's worth us investing the time into understanding your code base and then integrating this connector, because there's this tremendous base in place. That
Hmm.
means that there's going to be some mutual benefits for us doing this. And what those benefits are, for the obvious thing is, of course, Dolomite can use the bot to bootstrap liquidity on the platform. But the other
Hmm.
thing that we are looking at with this is the longevity of the bot itself, which
Hmm.
would be if we integrate a connector, how many people can we expect to potentially use it, because it's already integrated and people can use it off the bat.
Right.
We've used your base mixed with our API to basically basically limit the barrier to entry to people trading on the platform.
Hmm. Hmm. Cool. That's great. And so, how did you find the process of once you made the decision to build it? Like, how do you find the process of building it? Like, and for instance, like, how good were we at helping you? And feel free to be honest, because these are things that we're looking to improve as well.
Yeah. So I mean, honestly, our team is a lot of like has a lot of like do-it-yourself-isms. So we're very much so of the mindset of trying to prove ourselves at this point. We don't really reach out for help unless we absolutely have to.
Mm-hmm.
Which honestly, our experience using Hummingbot was like, if the code could describe itself, which it could, it was like, let's reach out to you guys after and let you know that's basically done or it's almost done, and
Mm-hmm.
you have a pull request inbound. Um, but otherwise, though, when we had like to make necessary discussions surrounding the pull request or anything like that, the team was always quick to reply with comments and whatnot. So I would basically say like, thanks for being responsive and everything. We haven't really kind of gone through any battle hardened testing surrounding
Mm-hmm.
your guys' processes, but the code kind of spoke for itself in that way. So we got a pull request up and running pretty quickly for it.
Good. Good. Thanks. We really appreciate that. Because we're also like proving ourselves as well. We're a startup as well, and so we're aware that like our documentation and our kind of like our like how much how well thought out it is still needs a lot of work. And so the fact that you guys have this like DIY mentality, I felt like it was really inspirational for us because it allowed us you guys like basically use our code base as is, even though we're still working on a lot of the commenting and the documentation for it. Thank you. Um,
Yeah, of
so
course.
yeah. So with that, I wanted to give you a chance to show off what you've done. So let me really turn it over to you, and please like kind of show our audience what this thing looks like.
Yeah, absolutely. So while I'm sharing my screen over here, okay, cool. Is my screen being shared right now?
Okay. Yep. Looks. I think it's being. Yep. I think it is.
Okay, awesome. So I wanted to just talk a little bit about like the motivation for us creating our own connector, and then also like the strategy we created with some insight on it. So the connector we kind of discussed a bit beforehand, and then we also want to make our own strategy on top of it. What we noticed was using cross-exchange market making was a really awesome tool if there was already liquidity on the exchange that you wanted to basically mirror and then basically commit arbitrage accordingly. However, there would be issues in place if we wanted to basically run pure market making on top of it, because what cross-exchange market making would do is it would just basically place one really large trade on our exchange, which is pretty unappealing to look at, even if it's for a lot of liquidity, because seeing one order on the books is pretty unappealing if you're trying to be the first couple of users on there. So what we decided to do was try to run pure market making, which the strategy itself it's designed to be very, very simple in nature. And we experienced that firsthand when we tried running it. And so immediately upon doing so, we're like, okay, it's just going to place a bunch of trades, and then every X interval, it's going to basically cancel them all and then replace them accordingly, which is pretty good for like testing purposes and as a base, but it's not really good in production because we're going to be in a situation in which we're going to be taking ourselves down, so to speak, every X interval as we cancel trades and replace them. So naturally, our team, what we wanted to do then was create a strategy that would be friendlier in terms of uptime and also friendly in terms of offering a pretty robust experience on there, so that we could basically allow other market makers to come in and market make the spread. So before going deeper into the strategy, what we envision for this is running a somewhat conservative spread around the current market price that allows other market makers, namely Hummingbot users, actually to come in and arbitrage the spread that we offer on exchanges like Binance then. So we could probably talk about that a bit more later. But diving deeper into the strategy, then what we call it is price target market making. And the price target for us is a global average that we set forth in our API, which is basically taken from CoinMarketCap's data. And essentially what it does is it market makes around the spread that's offered from a spread that's specified by the user, actually around that global average. So right now we're running at, I'm pretty sure it's a 2% spread around the current market price, going in both directions. So that's 2% going up towards the lowest ask and down towards the highest bid. And there's also a visual tool over here that you can see as well. And basically what we do is we apply a volume curve to it using Newton's method that basically specifies how much volume we want to achieve based upon a couple parameters that the user inputs. What those parameters are is how much volume do I want on each side, as well as the number of trades I want per side as well. And so what we have over here is actually a volume chart that we integrated with it that makes it easy to visualize what this looks like. And what you can see is that we have basically the full volume that we were trying to represent using the cells, as well as only a partial amount of the buys. So on the right-hand side over here, you might have caught your eye that we have a lot of errors coming down. And the reason why is we're actually testing it. It works pretty well in that essentially we have enough of the asset we're trying to market make on the sell side, which is Loopring's token LRC, but we actually do not have enough of the base symbol or the buy token, which would be Ether in this situation. So the end result is it's still trying to place trades, but it's not messing up the actual volume curve in that where the target amount is supposed to be. So diving a bit deeper then into what the volume curve looks like and how it actually rebalances, that's the more meat and potatoes of this. That's a bit more interesting. Essentially, after basically deriving a volume curve from the criteria I said beforehand, which was the number of trades, as well as the target volume per side and the spread and the step increment, we basically set up different thresholds. And then we categorize each price in what we call a bucket, which, as you can see over here, this 19,075 Satoshi level or decimal place level is one of the buckets. And we basically decide, is it okay, meaning we don't have to do anything at all? Is it high? Is it low? Or is it wrong entirely? And we classify something as being wrong if the price is shifted, and therefore the price is no longer favorable to us as a market maker, and therefore we need to cancel all the orders in that bucket entirely. And so something being high would be if the price is shifted and therefore we have too much volume in this bucket, we need to rebalance. We'll cancel some of the orders accordingly. And then if it's low, we need to place orders to replenish the bucket.
I see. So just stop right there. Is it canceling and then replacing? Is that handled by the strategy, or is this something that the user kind of manually does after looking at the visualization?
So the bot actually handles this automatically, which is a really cool thing. And we leverage basically Hummingbot's tremendous layer to be able to offer this functionality to people running this strategy then. So what this will do then is you see a lot of S's over here and a lot of B's. The B's, of course,
Yeah.
represent buys, the S represent sells, but each individual S and B doesn't actually represent an individual order, rather it represents volume. And so what's really nice with this is that when we need to rebalance, we don't just place one bid and one ask and call that our volume. Rather, we subdivide it into a number of orders that represents the volume. And so from there, we're able to very minutely resize then and not be very locked down by displacing one trade and having to deal with that immutable trade, because a lot of exchanges don't allow you to resize trades.
Right.
Rather, what they do is they force you to cancel it and replace it.
Yep.
And so one of the other things we did with this as well to make it friendlier is we place and then cancel, as opposed to cancel and then place. So we keep a buffer available of assets so we aren't overcommitting ourselves then.
I see. Cool.
And the other thing just to add to this is that the vertical bars that you see right here, I don't see, oh yeah, you can see my cursor, cool.
Yep.
The vertical bars that you see right here are basically thresholds. And that once the S's, for example, were to be replenished from people placing trades and taking the orders of the books, if it went below this vertical bar here, it'd be classified as low. And we would want to place trades accordingly to replenish this.
Okay, got it. And how much does each individual S and B represent in terms of volume?
So it really depends on the overall volume that you're trying to place per side. Right now we have it set for $10,000 per side, both bids and asks. So right now this represents about $900 or so over here.
Got it.
And you can see that the volume basically drops off significantly as you get further away from the current market price.
I see. And you mentioned this before, but the mid price, this is pulled from. Is it pulled from like another exchange or from like an API here?
So right now it's just pulling straight from our API,
Okay.
but it's pretty modular in that if you combine what we have built with Hummingbot Space, we can very easily swap that out for something else.
Got it.
So if we wanted to,
yeah.
So right now we're just pulling it from our API, which is basically from CoinMarketCap. It's like a proxy surrounding it.
Okay.
But if we wanted to pull it from Binance, for example, and just essentially mirror that, we could do that as well.
Okay, cool. So the user can and just to, and for our users, like, is this because you guys have both a connector and a strategy, and so what we're seeing here is a strategy, right? Is that,
Yeah, exactly. And the strategy, of course, utilizes the connector.
right? And then can the strategy? Do you think this will work on other exchanges, or is this kind of like tailored for Dolomite?
I'd say it's more so tailored towards Dolomite, or really in this situation, like the initial liquidity provider.
Okay.
This strategy wouldn't be all that useful unless you wanted to do one of two things: be the first liquidity provider on exchange, or the second thing would be trying to allocate all your assets to one exchange. And the reason why I say that is because if you run like cross-exchange market making, you essentially need double the assets in order to do it, because you split the assets across both exchanges.
Right.
Whereas in this situation, we're able to solely focus those assets onto one exchange instead of partitioning ourselves.
Right. That makes sense. Yeah. I actually think this is. We actually have a bunch of other folks who are also building exchanges, and I think this is also something that those guys can potentially use as well. Overall, I think this is great. It's exactly kind of like experimentation, but also this is like. This is exactly why we built Hummingbot, to allow people to build stuff that we haven't thought of, and I think this is exactly kind of the thing that Hummingbot users should want. Cool. So maybe can you show us maybe what does this look like, for like a taker on Dolomite, is this actually running on your exchange right now?
Yeah, it is. So can you still see the screen?
Yes.
Okay, awesome. Can you see my web browser right now, or is it still showing the
yes, it's showing the web browser right now.
Okay, perfect. So this trading pair that you see right here for LRC ETH, this is the pair that we're running Hummingbot on right now with this strategy. So what you can basically see is the volume curve that gets developed over here. And so this actually that you see over here, this red behind each order, is not the depth chart. It's basically the size of this bucket of prices compared to the rest of the other buckets then.
Right.
So it actually kind of mimics the volume chart that you saw on the terminal window from running
Right.
Hummingbot before with the strategy.
Interesting. So here you actually have more volume near the mid price than away from the mid price, right? Is that
Yeah,
understood?
exactly.
Okay. Cool. Got it.
So one of the things that we do offer with Dolomite is the ability to toggle between US dollars and ETH.
Mhm.
And I did that from pressing this button over here. And upon doing that, it actually shows the exchange in its entirety using US dollar pricing,
Oh wow.
including the trading view chart as well. So you can
Mhm.
see everything in that way. And as trades get settled, everything gets settled in, of course, in US dollars. And we index on all those prices historically. And what's really nice with that is you can very easily see the total amount US dollars that gets accumulated for each bucket,
Okay.
as well as like what the order prices are, the prices,
Mhm.
et cetera, et cetera.
I see.
Makes visualizing the strategy very easy.
Yeah, that's really cool. Uh, and so, do you have other market makers on the book, or is this like are all the orders here kind of coming from Hummingbot, or do you have other kind of like market makers in the books as well?
Yeah, so we were running another instance of the bot as well on our ETH die pair.
Okay.
And so one of the things we built is this really awesome brokering system that allows us to plug into the existing liquidity of other exchanges that are out there that are like kind of open source pooled liquidity.
Yep.
Our initial test of this was actually using ETH to die,
Mhm.
which was done using this brokering system. And leveraging Hummingbot as well, a different variation of it, we're actually able to plug into that liquidity and use this brokering system to port liquidity on there.
Oh, okay. So
Um,
you're using Hummingbot to port liquidity from are these like the on-chain sources like Kyber and like Uniswap and so forth? Or
Yeah, exactly.
okay.
And so using the stat set that we have pulled up right now, you can see that in doing so, we have a total exchange liquidity of 743,000, which is tremendous for a small company like us without a
Right.
very large budget. And we're basically planning on using this in other things with this brokering system to accomplish a lot more.
Hmm.
And this is one of those things that really sets us apart from other exchanges and makes us a very powerful and useful application.
Mhm.
So we're actually using this brokering system not just to broker assets between exchanges, but also to accomplish our variation on margin trading.
Mm.
And so that's one of the things that's going to allow us to offer things like limit orders for it as well. And
Mhm.
it's one of the reasons why we chose Loopring as a protocol compared to 0x. It's one of
Okay.
those things that makes us a bit more minute and different compared to them.
Mhm.
But kind of taking a step back, because I didn't actually describe this all that much. Dolomite runs its order book completely off chain, and we use an order matching engine to settle or to match all of the trades, and we use the blockchain then for settlement.
Right.
And what this allows us to do then is offer free and instant order placement and order cancellation,
Mhm.
which for centralized exchange users might sound very silly to say, but one of the things that decentralized exchanges can do is they can not necessarily charge, but the blockchain itself charges users to place and cancel trades if they run the order books on chain, because
Mm.
there's this very slight gas fee involved in doing so. And if you're a market maker, you know very well that that becomes very, very expensive because the role of the market maker is to move with price changes, which gets very expensive if you're trying to place and cancel trades constantly. And so basically with that, we use our matching engine to synchronize the state of the settled orders on chain. And so being able to broker the liquidity of the liquidity that's existent on chain with
Mhm.
and synchronizing it off chain is a very difficult challenge that we're very proud to have accomplished.
Interesting. Okay, got it. So basically, just to summarize, it sounds like you're running an off-chain order book, which makes it kind of like easier to match. It reduces the risk of collisions and other kind of like failures which impact traders. But you're also able to pull from on-chain liquidity sources into your kind of like off-chain order book. Is
Yeah,
that
exactly.
got it? Interesting. And so I think you also kind of touched on the fact that you're using the loopring protocol as
Yeah.
opposed to 0x. Can you tell our listeners a bit more about what loopring is and why you made that decision to use loopring?
Yeah, absolutely. So loopring by itself is just a protocol layer that allows us to settle trades securely on the blockchain, which is basically at its core the reason why we are a decentralized exchange as opposed to a centralized one. We use the blockchain as basically what I would consider to be a source of truth when it
Mhm.
comes to how the assets are being custodied as well as how they're being settled for transparency's sake and security's sake. And so by transparency, of course, I mean that if people were wash trading on there, it'd be inherently obvious because you could see the assets being handled back and forth, as well as for transparency's sake in terms of volume, because a lot of exchanges unfortunately fake their trading volume in order to make the numbers look more impressive to attract users onto there. And so one of the main reasons why we chose Loopring uh, is how they cater to this paradigm of using off-chain order books, which is exactly the way that we're architected. So there are of course competing protocols, like 0x is one of them, which is what I named. They also have a native token, the 0x token, which is listed on platforms like Coinbase, which is why a lot of people may have heard of it. And so 0x is very analogous to Loopring in a lot of ways, but when you kind of look under the hood, that's what makes them very different. 0x has this use case of tailoring towards on-chain order books with on-chain liquidity that Loopring can support as well, but Loopring kind of drew a line in the sand that they're really trying to support this off-chain order books use case, which allows us to kind of take advantage of the benefits I mentioned beforehand of free order placement, free order cancellation, and really trying to build a very highly performant decentralized exchange that uses the blockchain strictly for settlement. And so with that, there's some really neat things that we were able to take advantage of with it that I have not mentioned yet even. For example, anti-front earning software that Loopring has patented that we're using natively firsthand. And so what this means is that we match our trades with very high standards of price time priority, which is typical of a lot of the best centralized exchanges out there, in that we settle trades strictly by the price in terms of the best one that's offered, and then by time. So, for example, you can see on Dolomite right now, the current price of Loopring is about 3.2 cents. If you tried placing a buy order for 3.6 cents, which is of course very unfavorable, our order matching engine would see that, as well as the front running software that we have employed with it, and we'd match your order for the 3.36 cents that's currently the lowest ask on there. And we give all the margin away to the user in that situation. We don't pocket any of it. The user doesn't lose it. So even if you fat finger it or place a very unfavorable trade, we're able to see that accordingly and then match you with a better price. And what's really nice for that then is if you're a market maker then, or a sophisticated taker, you don't need to worry about someone front running your trades in this situation because it's inherently obvious that we're matching you by price and then by time. Whereas competing protocols like 0x that match you on chain are very exposed to the front running that typically occurs then. The way that trades get settled typically, if you're doing things strictly on chain, is you basically bid using a gas price to settle your trades then, which is one of those things that Hummingbot has very luckily abstracted away if you're dealing with a purely on-chain DEX. But it becomes very difficult then to deal with and manage.
Yeah. I think a lot of traders are familiar with the collision problem, and actually, even for us, that's probably one reason why we haven't, we've announced that we haven't added support for like exchanges like Uniswap yet, mainly because we want to make sure that the folks running bots aren't gonna constantly be hit by collisions and failures as they're running these bots. So cool. Corey, this is amazing. This is actually the first time I really looked at your exchange, and I just want to congratulate you. It seems like the actual UX is a lot simpler than a lot of the other exchanges I've seen, which I think is it's a good thing. It's it's I think I think that a lot of exchanges they almost like make it their user interface intentionally confusing for people. But this seems a lot easier in terms of what's important to display versus what users really care about. So great job on this as well as on the Hummingbot connector.
Thanks a lot.
I think we're kind of hitting the end of our show here. So I wanted to maybe just ask you one final question, just to kind of make sure we end on an interesting note. So obviously, everyone talks about price in the blockchain world, and I think a lot of us who've been here for a while have realized that price is sort of like out of our control. All we can really control is, building our respective startups and technologies and trying to get users to, use them. So in your view, what's like a kind of taking that buildable, stance and focusing on technology rather than price. What are you excited about, over the next 6 to 12 months, in terms of like what's coming out, whether it's like new protocol, new applications, or new like things that will kind of like start to get people to use more of these decentralized, finance things as opposed to centralized and like or even non-crypto things. Like, what do you think will kind of like get people into the DeFi ecosystem?
Yeah, I mean, I'm really excited currently right now by the lending protocols that are out there, like DYDX,
Mm,
B0X, etc. I think that those are really, really awesome platforms to get attention on there because they're basically disintermediating banks by offering margin accounts to people to trade
mm,
and pulling liquidity from every end user in order to offer those the margin accounts basically.
mm,
So I think lending is a really awesome thing that people can earn really great yield on that
mhm,
you really can't find elsewhere, which is pretty tremendous.
mm.
And so in the future, I'm really excited to see how those protocols are going to mix and match with advancements to protocols like ours running on Loopring
Right.
as we get better and faster, be able to offer a really robust experience that people will basically be able to trade very easily and with really, really cool trading features as well, like using margin
Mm.
and whatnot. I think that those are really exciting, especially as advancements are made from protocols like Loopring and 0x to become faster and offer better
Yeah.
transactions per second, lower settlement costs, etc.
So when you guys do margin, are you planning to use create your own lending protocol or use one of the existing ones out there?
Yeah, so as of right now, we're looking to utilize DYDX.
Oh wow, great.
At the start, we already have an integration finished with it. We're actually just launching that on our test network today to start really putting the nose to the grindstone and work out any bugs that are on it. And as soon as that stabilizes, we're going to be releasing it. So we're super excited for that. Um, Looking forward from there, though, we're looking at other lending protocols as well, like B0X. We think that
Mhm.
those are really interesting and offer some really cool use cases because it's similar to DYDX in that you can offer margin trading, but they
Mhm.
also have this really cool tokenized layer on top of it in which you can basically trade your position as well.
Mhm.
So we're at that point where we're really just looking to build this very neat base layer for Dolomite and then really let the direction of it get driven by our users in the community.
Mhm.
Of course, there's a couple things that are on a roadmap regarding scaling and making our infrastructure better that will come regardless as we get more users. But overall, we really want this project to be led and driven forward by the community because that's really what we're building this for. We're building this for ourselves as traders to use it,
Mhm.
but ultimately as well, the other traders that want to jump on the platform and start utilizing it and find new use cases and different ways to profit with it and things like that.
Cool. That sounds amazing, and I'm really looking
Thanks.
forward to playing around more with Dolomite. Maybe I'll start a bot there this afternoon, as well to all the features that you guys are going to come out with, like margin trading and others.
Awesome.
So with that, we're going to wrap up our show today. We're hopefully we'll get some maybe intro and closing music the next time around, so that it feels a little more professional. Our goal here is always continual improvement. So hopefully this will get better and better. I want to thank Corey for being on the show. I think that having the voices of other folks in the community is a really important thing, and that we're going to try doing forward as well. So, yeah, with that, I'll just end the show here. Thanks, Corey, and
Yeah,
we
thank you
will.
so much.
Oh,
This has been tremendous.
thanks, and hopefully we're going to try to get the Dolomite custom strategy and their connector merged into their code base over the next 2 weeks. So hopefully then people can start taking advantage of the trading opportunities on Dolomite. Thanks, everyone.
Awesome.
Bye now.
Thanks a lot again. Bye.
Bye.